Hello traders, what's up? It's your boy Cameron Williams over here from Smash Trading with another video. So I decided to look for alternatives and I started to come up with strategies for you guys. Hopefully you will try backtest, forward test, and then tell me how you experience using my strategies. So today one is a combination of 20 EMA exponential moving average plus identifying doji candles, because either for entering or for exiting I use them a lot in my trading myself, so they might give hints where about to get in, where about to get out for your trades. So let's see what we need. Yeah, so we got 5 type of doji candles. One is classic, which is like plus. One is like log leg, and it's like having wicks from both sides. And then one is like dragonfly, longer wick from the bottom, lower longer wick. And then one is like minus and kind of just a dash. And then one is like gravestone, as you see. Just plus being classic is basically like indecision, and then probably either on lower time frames, either hands for you to get out of your trade, or for you to continue your trade. Let's say you open the trade, open a buy trade, and then after a few candle, one classic came in, and then you could just take it and then hold the trade. Again, trading being trade and being trading is about possibility, so there's nothing guaranteed over here. If I say, oh, you're gonna see classic, and then whenever you saw a classic doji candle, just keep trend reversal, or just trend continuation can happen. But mainly for me have been case for exiting the trade. So we got log leg as well, so those log legs are almost the same as well. For reversal happens a lot for reversals. Dragonfly usually applies for trend for bullish movement momentum, so it's gonna show us pre-indication of momentum going upward, uptrend. And then full price, which is that dash, is like price is gonna stagnant for a while. It's not gonna move anywhere really. And then gravestone is pre-indication for price dropping you call it micro trend phase. Price is gonna drop. So now we know the names, and then what could each one possibly mean. Let's go to trading view, and then let's check out today words of trading for GBP/AUD, one of my favorite pairs to trade. Yes guys, so GBP/AUD, because it's just scalping on 5 minutes, we're gonna look at trades and then like momentum rather, to get in and get out as fast as maybe 10 minutes or 5 minutes, depending on if we get the, let's say, TP hit. It might be a case of 5 minutes or 10 minutes. So first of all, what we need for our trading, we need 2 indicators over here. So first one, what I have already over there is this EMA, and then if I go to the setting, as you can see, I just have the 21 showing over here. So I kind of unticked 50, 100, and 200, because that's like slower, so I need the fastest one, which is 20 over here. You could try it on 50, but then 20 is really nice for us, especially during one session, to get us enough trade to take. That's one. So basically nothing I missed over here as a kind of setting. And second one is MACD, MACD. And if I go to this setting, obviously it says 12, 26, 9. So basically everything's over here. All I did was kind of thickening these lines a bit so you can see them well. MACD line and signal line so you can see them well, to tell you what confluences we need and then when we're going to take the session. And then one thing you have to bear in mind, guys, you're not going to trade like 24/7. So in my case, let's say when I started these dash line, you know, this kind of vertical line over here we see, that's kind of, you know, about starting my trading day, like starting point. So I'm not gonna just wake up and stay awake and you know, just watch candles up and down, especially if I'm gonna scalp, which is like blinding myself. So I'd rather to know when I'm about to, you know, get up, and then when I'm about to, you know, say okay, enough for the day, I'm gonna call the day and then finish. So this in the case of starting, for me that's gonna be you know, just before London Open, which is around 6:50, around 7 o'clock we call it. So I'm starting right here, and then what we need to see, first of all, we have to base our, you know, let's say direction using this 20 EMA, saying that what we're gonna see over here. Let's say I woke up and then I looked at that. If I kind of, you know, remove this line, which we know is around 7 a.m. That's the starting point for me. Again, that depends on when you want to, you know, trade. But in my time, I'm talking about my time because I don't know what time you're gonna, you know, trade. So I look at it. This is a doji. It's very like plus one we checked earlier. What isn't it? Obviously, being 2, price has been, you know, not moving a lot till, let's say, this time. Hasn't moved a lot, so price after this could have gone anywhere, but then how are we gonna identify that? So first of all, we're gonna wait for closure of any trade. So we're not gonna just jump because let's say some trade is, you know, floating and, you know, fluctuating up and down. We're not gonna jump in, so we wait for the closure of any candle. So at the closure of this candle, we know is a bullish one, and obviously being green in the colors as well, this one is bullish, so it's going to close above 20 EMA. That's one confluence. And then what else we have? So if we look at the exact same moment, like same 5 minutes we're having, we're seeing, yeah, the blue MACD line, I call it blue and, you know, orange, so we can identify them easier. So the blue one is, you know, opening, like fanning out, and is, you know, fanning out above the orange one. That's you know, buying pressure, buying momentum we need, because it's a momentum based strategy, isn't it? So the green candle close above 20 EMA, that's one confluence. And then we had the doji, classic doji, just before our opening candle. That's a sign of a trend, you know, kind of trend reversal, or, you know, momentum about to occur. And then what we're gonna have over here, we have the diagram in green, and actually have that, and then the blue line is above orange line. So we're gonna take the buy. We enter over here, and then for sake of having it the easiest to take out, like exit the trade, what I done, I said, okay, I enter over here. My stop loss is gonna be the very start point of the previous candle, which is over here, so it's gonna be over there. And then my TP just normally be 1. So we're gonna risk, let's say, 1% to make 1%. So that's one hit. And then we see again, we just made this buy, so we made the buy trade, we won it, and then we see after that, let's say, imagine if we just carry on monitoring the price candle by candle, and then we see, oh, we have a +1 as well. Actually, it's more look like have a, you know, look like log leg doji candle, which means pressure toward down really over here, because we recently had the momentum upward, and then sellers trying to push the price down, and actually they're taking over, because if you look at the histogram and then the diagram of the MACD, we see price is losing the the strength of it. Like, so buyers are kind of weakening, and then price is coming down, and then losing the buying pressure, and then obviously as they do that, sellers are taking more power and then pushing the price even lower, which at this point we're already below 20 moving average, EMA obviously, exponential moving average. At this point we're gonna cross-check it with the MACD, which we see the orange one is above blue line, or inversely blue line is under orange line, which indicates selling pressure, and plus the diagram is in red. So at the closure of this candle, we're gonna enter our sell again, similar to our buy. The very first or opening of the previous candle gonna be our stop loss as we enter here, and stop loss gonna be over here, and our take profit again easily is gonna be 1 to 1. So we're gonna raise 1% to make 1%. So TP hit over here again. That's that, and then we're gonna look for another opportunity if we get, but we see sellers and actually price dropping, fading out over here, buyers trying to push out the price upward, but they couldn't. So that's another good reason for us, let's say confluence for us, because we see price is kind of rejecting from the 20 EMA, as well as over here see another doji candle plus classic doji candle, meaning, let's say at this section, which we can confirm it with the MACD, price try to break the moving average upward, but they couldn't, with this being formed over here with this plus one, which is classic. And then we see price ended up closing below EMA again, and if we cross check what we needed to enter a sell, we need price B below moving average, EMA 20, plus this these lines be in order of orange one be above the blue line, which at the closer of this one is fanning down, and this diagram is in red, MACD diagram. So we're gonna enter our sell over here, and our stop loss is gonna be opening of the previous candle, which is gonna be over here, and our TP be 1 to 1. That's another 1%. Let's call everything equal and round number. So another trade TP hit. That's that, and then we're gonna check price over here, because if we take it, we have the price closing above moving average. That's one confluence done, and then our blue line is above orange line. But then what about the histogram? What about the gram? Yeah, so what about this gram? So this is green as well. That's what we need. So if we take this, we're gonna take it and then see what will happen. So we take that, and our stop loss is gonna be the various start point of previous candle, and we lose this trade, which is fine. We're not gonna make it all the time. So we lost this trade, and so for selling, as I said to you, as confluences, we need a few confluences. One of them being price closing below moving average, and then the gram be in red, showing continuation of, let's say, selling pressure in this section of the market. But then we didn't have it here, did we? So we're gonna move on to the next candle which gives us all the criteria we want to have. Price close below moving average, and the MACD histogram, MACD gram is in red, and then sorry, I have to zoom out and zoom in a lot to make things appear over here. So previously we did enter and then price, the blue line was above, and this time MACD blue line was below the orange one, that one confluence, and then the gram was red, and then also price closed below moving average. We entered, stop loss got hit. See, at this and obviously in this trade we didn't use any doji candle, obviously. And here we can see this is another log leg doji candle, which shows refusal of what momentum was previously. So that buyers tried to push the price up, but then sellers did their best again and pushed the price even lower. So that's one confluence for us. Sellers are still in power. And then look at the size of this, let's say, bearish candle, guys. So that's on its own is so strong for us to get in for sell. But then again, that's one confluence, local leg doji candle, plus price closes below moving average with this big candle, like chunky candle. And if we look at the gram, we can see closing in red, and then price just the blue line just cross below the orange line, which gives us the pressure for selling. And then we enter this trade, and then we can take the stop loss all the way to the very starting point of this which you may not, just like very tiny bit we needed. Let's see, still going on. So this trade, we can make it, probably we can make it, and yeah, so it will be finishing around 1:15. Yeah, it will be on this trade for maybe hour or 2 hours, starting from 10. Yeah, almost 2-3 hours. Yeah, but then it is what it is. Nothing is in our control. We're gonna just approach the market as armed as we can, guys. Again, nothing is guaranteed, so you're gonna lose a lot, but then hopefully you manage your risk, and then you come up with a nice strategy. Let's say if you have a strategy, if not, then you can use mine or any other one on YouTube or anywhere else, and then just stick to it, and then back test, forward test it, and then you will find out your edge, and just carry on sticking to it for a while, and then see if you can smash it or no. Now, guys, as we follow the market, we will see price already showed interest in terms of tendency to go up, opposite direction, like going up, as we see resistance for the price going further down over here. Once they tried, and then actually the price broke through the 20 EMA, which we follow. So what we said, price has to close, candle has to close above 20 EMA. That's one confluence for us to buy. And then what else? So these gram over here, so I'll call it gram, whatever, block, whatever you want to call, let's call it blocks. So these blocks have to be in green color, a part of MACD, which is, and then also, as we see for a while, the blue MACD line been traveling above the orange line, showing it has kept the momentum of buying, or actually uptrend. So it kept it all the way till here, and then we entered our buy as well. A stop loss being very starting point of the previous candle. And then what about our take profit was 1 to 1. That's another 1%, guys, gain. And then we see, look at this one, guys. Look at it. Just mention you the doji candles. So again, long leg, again showing you long leg, very similar to this, isn't it? Long leg. So you guys see this one, long leg. So again, what long leg means again for you guys, pretty much very likely reversal about to occur, which is, so buyers tried to push it up. They did push it up for 7 pips, 10 pips to call, but then they couldn't, and then this pre-indicates us for price to keep going, keep going down, which has happened and then happened over here. So that's another doji saying us low leg, showing price is about to change the direction to go down now. And then we close the look, and then let's say we just carry on watching the market, which is not what I would want to do. But then as scalping, you have to get in and get out as soon as you can. So about selling, we're gonna have our confluences all intact. So we say price has to close below 20 EMA, yes, close over here, and then the MACD block has to be in red, which is also, again, the blue MACD line has to be below orange line, which is. So we're gonna enter over here, and our stop loss will be where? Just very starting of the previous candle, which we did enter. And then our take profit again would be easily 1 to 1, and then we smash that as well. Obviously, guys, as I said, I'm gonna just keep it till this line over here, vertical line, because that's like I started like very close to London session, the whole London session, a bit of overlap of London and New York. So that'd be pretty much all London session, just a bit of New York. So if you time yourself, you know what time suits the best for you guys. To me, this is the best time for me to trade. And then we see what price is doing, price action, what we're going to call it. Formation of the candles. Again, how many doji candles we have over here. Earlier we had this 2-1, which very similar to the plus one. Over here we see this is like indecision, very just both like almost equal up and down wigs. But this one looks like this dragonfly, isn't it, guys? Very similar to this dragonfly. You see the lower wig is longer, and then with that we see the selling pressure is weakening over here. Why? Because MACD says so. Because look, so as over here where dark red, and then as as time goes by, we see let's say bright and light red, which is almost kind of pinkish, telling us of weakening of selling pressure, and price dropping is weakening. So buyers are pushing hard toward upside, and then very likely price could go up, which this indicates that over here, and then it happened. Why? Because that was first confluence for us, guys. Then this was the second one. Price is taking and actually getting upward momentum, but then we're still not entering, are we? So what we needed, price to close fully above the 20 EMA. So on this one we could enter, but then we have to cross check. And this MACD block is also green, and here not very strong, but still could do, because the MACD blue line just crossed the orange line, which we could enter over here. So if we enter and then our stop loss would be easily just the starting point of the previous candle, which is about here, and then take profit 1. That hit as well, guys. So that to me could do, but then let's take this trade as well, because we still have the you know, let's see the confluences. Again, what we're having over here, price is also still above 20 EMA in a pure chunky green candle. That's one. And then the MACD block is also in green, and also the MACD lines are fanning out, the blue one being above. So we still are valid to take a buy. So at the closure of this candle, or this one, either one, let's say we close on this one and then we already open another one. So we're gonna close that one, enter there, and then put our stop loss at the starting of the previous candle, and target 1 to 1, which is gonna happen here. That's it, guys. Obviously it's not that easy when you trade like live trade, but then that's basically the theory behind it, the practice behind it. So you got the strategy, but you have to, you know, forward test it yourself. Don't just believe in any back test, whether with robots, whether with manual strategies. Try them out yourself on paper paper accounts, and let's say on TradingView or any other, you know, backtesting platform if you have access to, and then see for yourself while in live trading, you know, situation, what would you do as let's say this candle closes, and what would you do? Would you enter ISAP so you could, you know, calculate everything? Let's say your edge of stop loss gonna be over there, so you'd be fine to hit your TP over here before, you know, probably getting stopped out over here on this one. Yeah, it's just you have to be that fast. That's the downside about, you know, this strategy and scalping overall, because you have to be really fast in most cases. Yeah, guys, that was about the strategy about using doji candles and then 20 EMA. Please consider subscribing to my channel. Hit this bell icon, and then I'm gonna come up with regular basis and weekly videos once a week. Honestly, I'm really busy with other stuff going on, and then I will see you next one.